good evening. Welcome. Thanks very much for spending some of your Tuesday evening in a rather cold fashion, certainly here. It's now 12 degrees and it's raining. I took the dogs out a little earlier and they didn't particularly want to go for a walk, but I took them out nevertheless. There's the full screen doggies cam, so they're both sound asleep now. Meteor is the one at this end, Luna's the one at the other end, and I think they'll be there for the whole show. They tend not to wander around much at this time of night. So great to have you on. Now, I should just warn you that Adam as yet has not arrived. Now, that's a bit of a surprise because it was all sorted out and booked and everything. So let's see whether he does arrive. But at the moment, it'll be me chatting about some of the research I've done, and we might move the conversation on to talk about property, given the fact that there's so much going on there as well. So hang with us, and we'll see how this show develops. It's probably the second time ever that the person who signed up to come on has not appeared, and unfortunately I haven't been able to get in touch with him through the normal channels and a few back channels, so I'm not totally sure what's going on. Anyway, hope he's okay, and hope it's a minor technical glitch and he pops up a bit later. I've left the Zoom on if he comes in. Anyway, before I get started on the proper show, we might just run the intro, and then I'll be back in a second, so stand by. Well, good evening and welcome to this live stream event. Great to have you on the show tonight, and we're going to have an interesting show, probably not quite the one I expected because Adam has unfortunately not turned up, and I've not been able to get in touch with him. But nevertheless, I've got some information which I want to share with you, and I'll be able to take some questions, of course, and we might broaden the conversation to something beyond crypto and perhaps touch on some of the latest property developments, because there is moving quite fast there too. But as always, let me just remind you, as I always do, that we don't provide specific financial or legal advice or property advice or anything on the channel. It's a general conversation. This is at the 19th of July 2022. And if you'd like to ask a question, use that Walk the World to get my attention. Also, if you would like to get your question top of the list, use Super Chat to do that. It's being enabled. Or if you'd like to make a contribution to what we do here, that would be greatly appreciated. Anyhow, the purpose of this show was to really try and explore some of the shenanigans around crypto. And, there's a few things that we can start talking about straight away. I'm going to start with the old Bitcoin chart. This is the latest up tonight. It's sitting at 21,905 at the moment. And I thought you might be interested to know. I picked up a little Bitcoin around the 3rd of March 2020 when it was a 5,127. So I'm still sort of holding. I did sell some earlier on, but I am holding most of it. So the question to my mind is, are we going to see Bitcoin go lower? So, below 21, down towards what I paid for it? Or is it going to go to the moon? And in fact, there's a chart, or poll, I should say, right at the top of the screen there, which if you'd like to put your views in, I'll share the results of the poll a little later. The question in the poll was, where do you think Bitcoin will be in a year's time? Will it be high? Will it be lower? Will it be the same? Or indeed, will it have disappeared? And of course, Bitcoin is the largest of all of the cryptos. Now, there's a big interesting debate: is a Bitcoin a crypto or not? And I've had a lot of people beat me up saying, "Don't be so silly. Bitcoin isn't a crypto." Well, to my definition, it is. It just happens to be the big one, 41% of the market. But of course, the whole overall market's now dropped from $3 billion US to it's about 1 billion. And the question is, where's it going to go? And of course, the other factor to bear in mind here is we've seen now considerable disruption, particularly in some of the distributed financial solutions that are around there. And of course, the one that I mentioned the other day in a separate show was the Celsius liquidation. So the Celsius network was basically a bankruptcy. And it's, of course, that's a protective bankruptcy, so it's not necessarily gone away completely. But it does looking at, I read through the filing, and it's quite a long and detailed one. And there's a few observations which I'll make in a second. But one of the most interesting was this. If you look at the Celsius creditor list, you start seeing some of the same names popping up again and again and again. And this felt to me a little bit resonant of the global financial crisis, when effectively you had a lot of financial companies all connected with each other and essentially all cross-leveraged to each other. And so when one drops, other ones drop, and another one drops. And I'm wondering whether we're seeing the same, because we've seen a few other failures, of course, and different parts of the crypto universe wobbled. Bitcoin is down. I will just also just share with you the Ethereum, because that's gone up and down a bit too. Let me just put the right number up. There we go, that's that one. So that's the Ethereum story, which was up a little bit more today. It's at 1,531. This is US. But again, went up to a very significant peak, and it's come back. So the question ultimately for people to think about is, why is this going on? Is this a temporary wobble again? You know, we've seen the crypto winters before and they've come back. Or is this something more systemic this time around? And that's really what I wanted to chat with Adam tonight. But as he's not here, I'll tell you what I think. And I'll be interested to perhaps see what the chat is saying, and put some of those up too. So I think this is a bit different this time. There's a couple of reasons. One is that we've started to see in the last 2 or 3 years the intrusion into the crypto universe of a number of very large and capitally intensive players who started to take very big positions and essentially have influenced the networks quite dramatically. Plus the fact that, of course, we've got people now with options and futures sitting over the overlay of the underlying. And that's exactly the same as we've got in gold and silver. And those things then create the same dynamics as we've had in the big, grown-up markets, as I call them. And what I think we're seeing now is effectively the crypto market starting to behave in a much more similar way to the main financial markets. They've been intruded by major investment banks. They've been intruded by a number of other large players, and of course a number of new entities have been created. If I think of this one, for example, Coinbase Global, launched just in May last year with a lot of fanfare. It's hit 340, and then it went up to 360, and now it's down sitting at 58. And there are some interesting discussion points about whether this is likely to hang around or whether it's not going to hang around. Well, who knows? But this is another example of a large player starting to try and dominate and effectively, capitalize on the momentum. And I've been speaking to a couple of people involved in the local exchanges, and they're certainly seeing two very important trends. Firstly, there is more selling pressure than previously, and some of that selling pressure is being blotted up by some of the bigger players who bought earlier. The second is now there's definitely a bit of a run to the exit. So this is basically a very interesting, critical inflection point. Are we going to see a run to the exit and the dissipation of particularly some of the other coins that perhaps never really should have been in existence to start with? I mean, 20,000 seems quite a lot of coins to me. But then, of course, the question is, well, how does that play to Bitcoin? Does that give Bitcoin more market share? And the numbers would suggest that it could be expanding in terms of the proportion of the market that it actually dominates. Or is that also going to go the same way? And, I can't tell. I'm not sure anybody can. But it is interesting because there is a wide range of views out there between those who believe that this is just another dip. And we're going to see, Bitcoin in particular really take up over the next few years. It's going to evolve into something much more substantive and effectively will be the foundation of, if you like, the next generation of digital training and digital platforms. There are others that say, no, that was then. We've actually gone beyond that. And essentially, because of the intrusion of all these large players, because of all the cross-leverage, the risk is it could actually fall the other way. And if you get more traffic accidents with some of the other big players that are actually playing around, in the space, it could actually just create more negative momentum. And I'm not sure that anybody knows, but it would suggest to me that, if you are a believer in Bitcoin, you will go on believing that it's going to go up again. And there are some very significant players with large holdings who still believe that. There are others who think that it may be going the other way. But then the other overlay, and this is again something I wanted to touch on with Adam, was the central bank digital currency debate, because the other thing that we're seeing now is the development of central bank digital currencies. I mean, there's initiatives in the US, the UK, Australia, and other countries too, and they're all talking very seriously now about central bank digital currencies being deployed, and relatively quickly. And even in Australia, the original idea was that it was going to be a commercial central bank digital currency for commercial purposes. But now Treasury is looking at it in terms of retail. And in the US, the Fed is talking quite openly about now wanting to run this in very quickly. And there's some interesting thinking going on about what this means, because essentially you could argue that they could be picking it based on the downward movement in crypto over recent times, and essentially saying, well, crypto didn't work, but it never would because it was decentralized and it was uncontrolled. What you need is something with a bit more control. And so the central bank digital currency story is one about control, particularly in a high inflation or a low interest rate environment, because effectively central banks then can create effectively a central bank digital currency, give you an account at the central bank, and then they can put money into that account for specific purposes, or they can make it so that the value of the currency changes over time. There's a bunch of things they can do which they can't do with physical. So that's sort of the first angle. And the second angle is, and we've seen this from the Bank for International Settlements, and also we've seen it from the United Nations as well, and a couple of other entities too, that are talking about, well, maybe there's an opportunity to connect central bank digital currencies so that effectively they can trade across different geographies. Now, that sounds to me like the very foundational discussions that could take us towards a sort of more global currency, which now a more global currency under the auspices of the UN or the OECD or whoever you want, a digital currency controlled by central banks. How comfortable are you with that, is I guess the question I've got. And is that the tussle that we're going to see between the devolved, decentralized crypto universe and the alternative? I'm not sure, but that is how I see it at the moment. And given the fact that central banks really have stuffed up inflation management quite significantly for the last little while, doesn't necessarily suggest to me that they're going to do anything better with this particular initiative too. So we're in the situation, I think, where you could argue that existing currencies and existing central bank controls aren't working very well. The digital world and the crypto world is pretty wobbly at the moment too. And so the question is, how does it all play out? Don't know. It's going to be very interesting. But it seems to me that there's a level of uncertainty in pretty much everywhere that I look. And I guess, that means that there's no certainties about the future of crypto. There's no certainties about the value of crypto, but then you could say that about other currencies too, and about other forms of fiat money too. So it's all sort of thrown in the same pot in my view, and I'm not sure that you can actually any longer say that, well, crypto's outside the system, it's no longer going to be behaving the same way. It seems to me that actually it's all going to be dancing the same sort of tune, and the central bankers and their regulatory frameworks will become more and more part of the story. So that was my sort of thesis, which I wanted to explore. Now let me have a little look and just see what the cross is, what the commentary is on, and and there's some very, very good comments there. This is a good one from The Reverend. I'm still trying to figure out if this latest stuff is a failure of crypto or whether it's a failure of more traditional financial services who built their products on top of crypto. I think it's a very, very good comment. And my own view, for what it's worth, is I think it's more of the latter than the former. I actually think the underlying philosophical sort of thought around Bitcoin was actually really interesting and potentially very, very fascinating. But it's been intruded upon by the traditional financial services players and their hangers-on, and they've done precisely the same as they've done in other markets. Maybe they couldn't help themselves to make a buck. And of course, the investment bankers have made a lot of money out of all of this. A lot of those new entities that were created, well, people made money on the way in as well. And of course, it was all being driven essentially by the uprise and the enthusiasm in crypto. What I'd also say is that a lot of research has shown that some of the people who were pulled into crypto, particularly some of those later investors, some of the smaller individual players, were those who were less able to afford to lose money. And in fact, in the US, there were surveys done to show that there were particular socioeconomic groups that were less advantaged in many ways. They were piling into crypto because they actually believed that it was actually a way of enhancing their wealth. They couldn't get into the housing market. It was impossible, etc., etc. So to my mind, I think that's a really important observation about what is the root cause. But, like it or not, what we've actually done is we've created now a set of circumstances where the traditional thinking of the traditional financial markets have now intruded, and of course there's no regulation. This is the other factor. So that's why, of course, many people are now saying, well, we should be regulating cryptos, etc. Well, except that, of course, the original philosophy was no real regulation was necessary because, of course, it's all decentralized, devolved, and the ledgers are actually immutable. So I think that is pretty important to say. I will just say hi to Smooth as well. No worry about being late. You weren't the latest. Unfortunately, Adam Stokes was even later. He hasn't yet appeared. So I'm really just sharing some thoughts that I've got about what I think and looking at some of the comments in the chat. And if there are specific questions you'd like to pose or points you'd like to make, feel free. There'll be plenty of time to make. Mr. Brindle asks, what are your thoughts about investing in cryptos versus silver and gold? Yeah. It's a very good question, and what we might do is we might have a little look at where gold is. Well, gold at the moment, just get rid of that. Whoops. Get rid of that. Gold at the moment is sitting at 1712. This is US dollars, and interestingly, if you go back, you can see that really since April 2020. It was at 1710. Now it's back at 1710, so it's been up and it's come down. And there's a lot of interesting debate about whether, in fact, gold is behaving the way that a protective currency in terms of inflation should be. And if you look at silver, well, silver's actually a bit the same. Again, you can see that it's 1880 at the moment. And if you go back earlier on, well, it was lower back in 2017. And you can see there that the previous peak in 2016 for silver was just over 2063. And so it's actually below that. So again, neither of these two particular commodities have, in my mind, behaved the way that you would expect those commodities to have behaved if they were hedges against inflation, because inflation is now booming. Now, if you talk to, say, the likes of Harry Dent, Harry will say, well, gold and silver are actually not very good hedges of inflation at all. And in fact, his view is that gold will go further down. Maybe not. Of course, there are people who say, well, I don't really care about that. What I care about is I've got something physical that I can hold on to. So if you've got physical gold or silver, that's good. If you've got a certificate that says your silver or gold is somewhere and you've not got it, that may not be quite so good, actually, given some of the things we know about what's going on. But, you have to say that as a form of hedge against inflation and as an investment that makes a return, doesn't actually do well. And, of course, in a high inflation environment, the truth of the matter is that actually you get no returns from gold other than the capital movement. And what's interesting, of course, if you talk to someone like Harry Dent again, he'll say, well, actually, it's US Treasuries. That's where you should now be, because effectively we've seen the run up, and that means that the value there is now probably locked in. Difficulty in Australia, of course, is the exchange rate can knock that all over, so it's not necessarily that clear. So to my mind, there are some similarities between effectively silver and gold and crypto. None of them, in my mind, actually necessarily are actually dead certs when it comes to investments. Now, over the longer term, maybe. But then the question is, where do you think crypto will go in 5 years, or where do you think gold and silver will go in 5 years? Difficult to say from those charts, isn't it? So that's my thought on that one. What else have we got? Yeah. We'll put some of the posts, we'll put up some of Cookie's property price drops and discuss those in a little while, and see what we can explore on those. Should be quite fun. But let's have a look. AI says Bitcoin is old technology. If you want to invest in old technology, good luck to you. That's a very good point, of course. Some of the other technologies claimed to be somehow better or newer or faster or whatever, except, of course, a lot of those have now not necessarily performed. And I guess the other interesting point, did you see that Celsius Network, for example, was basically offering returns of 18% to people who threw the money in and they threw it on? So there is a very high rate of return for some people. But you've got to ask the question, as I keep asking, is that a signal of high risk, the fact that you can get those significant returns? Because on the whole, risk and returns are somewhat related. And if those risks are so high, then are those risks explained sufficiently to the investors who actually put their money into some of these cryptos? Particularly some of the newer ones, by the way. And the answer is no. I think a lot of people didn't know what they were getting into. I don't think they necessarily read the small print. In fact, if you look at the Celsius Network material, there were long disclosures there about what the risks were, but who reads the small print, I suppose, is the question. So that's part of the trouble, really. So the underlying technology, Ethereum, those things definitely potentially have more opportunity, possibly. But nevertheless, the question I got to ask is what is the real story here in terms of the future? And I come back to my point about central bank digital currencies, which could well be on Ether or some other platform. If they really start taking off and being imposed, what does that do to the crypto sector? Does that squeeze it effectively? Ultimately, does it fall apart, or does it morph into something else? Or, I guess that's part of the uncertainty that we're seeing at the moment. Now, there's quite a few people there talking about other coins. People saying I got out then. Polygon, there you go. There's plenty of other ones. Very good on that one. Yeah. And so it goes on. But look, the point is this. There's a lot of uncertainty, and I'm not sure that the future is clear one way or the other on crypto. Interesting comment here as well. Every cycle has been, since 2010, has been a massive deleveraging event before the next run. This feels no different, except that we have the interests of entertainment corporations. That's quite an interesting one. And there are some people who say, no, this is what you'd expect. This is precisely the run-up you'd expect, or the fall that you'd accept. Nothing different here. I guess I'm arguing that it feels to me different this time when so many of those large entities are going bust in the middle of it. That really didn't happen previously, partly because, of course, it wasn't so significantly exposed. Don't know. It's a very interesting question. I really can't necessarily read the future. Interesting one from Sean here about central bank digital currency stored in a cold wallet solves the bail-in problem as you become your own bank. That's certainly true. And of course, the point about central bank digital currencies more generally is you actually don't need retail banks to operate in the same way. One of the big debates going on, and if you look at the BIS discussion papers and the one from a few other sources too, is, well, what's the role of banking and banks in a central bank digital currency? Because basically you could have an account at the central bank directly, and they could put money into your account directly. So what precisely then is the role of the central banks, and what is the role of the retail banks, and how does that play out? And one of the things that's going on at the moment is the tussle between the retail banks, who are trying to actually protect their positions and say, no, we want to be part of this puzzle. And central bank is saying, well, we don't necessarily want to own it all. But there's a very significant tussle going on between those two stories, I guess. Nico said this, you here believe everything the government tells you. Well, I certainly don't. I'm a quite sceptical individual, but what I find fascinating is how the temperature around central bank digital currencies have really changed recently. And as I say, all of the central banks are now saying we're going to do this. I would say that we didn't vote for that. I didn't vote for that. I would like to be much more widely consulted about the future of central bank digital currencies, and not have it imposed on me just because they think it's a good thing. as Stripey says, eat bugs and you will be happy. Yeah, I think we want a bit more conversation than that. So let's have a go. All right, Cookie Boy says, the latest in inflation news, Australian inflation rate confirmed at 47-year inflation rate climbed to 6.7% in June 2022, the highest rate in September. Yes. Well, that's Austria, not in Australia, of course. I misread that. And I will say that around the world there are a number of inflation rates which are significantly higher than expected. The US one was, of course. Ours comes out in Australia next Wednesday week, and most expectations are it's going to be above 6. Some are saying it's going to be above 7. So it'll be very interesting to see how that actually plays out. Another one from Nathaniel. Central banks are such a stupid idea. Can't believe they'd think it's good. It's greed in sheep's clothing. It's control in sheep's clothing, actually, Nathaniel, I think. The point is this, that central banks don't feel that they have got the levers they need to control the economy. I mean, look at what they've done with quantitative easing and quantitative tightening and their interest rate levers. They're struggling now to control inflation. And, we're going to see interest rates rising. ANZ today said another 0.5% times 4 till the end of the year to lift rates by another at least 2% in Australia. So central banks are struggling to find the tool set. And there's been a number of papers written to say, well, if you gave central bank digital currency and the ability to be able to actually control the currency more directly through central bank digital currencies, that gives them more tools in their toolkit. So to my mind, it's not just greed, it's actually about centralized control, which I personally have a big problem with. I don't think we should be going into that sphere of influence. I don't think central banks have proved that they've got a significantly positive influence on the way the economy works. I'd want to turn them down rather than turn them up to 11 and say, yeah, sure, give us central bank digital currencies too. And by the way, that leads immediately to universal basic income and those things, because basically what they can do is they can put a little bit of money into your account at the central bank. They can also determine how you spend it, where you spend it, and force you to spend it, because what they can also do is to say, well, what we'll do is we'll tick down the value of that over time. So if you spend it within the month, it's 100, but if you leave it later, it'll be 90 and then 80 and 70, etc. So they can literally get to the point where they can engineer people and force them to sell and spend rather than actually just hold currencies, because one of the big things that they're wrestling with at the moment is all of the money that people are holding in terms of savings. If you look at the savings ratios and if you look at the amount of cash in the system that's not in the system because people are holding it outside the system, that's a problem for central bankers. So they do see central bank digital currency as potentially a lever to drop the controls even more widely and effectively try and engineer. Now, I don't want technocrats running the show, and I definitely don't want central bankers to run the show, and yet that's what some people are claiming they want. So that's where the control question really, in my mind, comes in. Interesting one from Kieran. Do you think the RBA is going to push a 1% rate hike next meeting? I think it's probably unlikely that they will do 1%. Some people are saying 75% is certainly possible. I wouldn't be surprised if they do 50-50, to be honest. They are still behind the 8 ball. They haven't really woken up to the fact that they've got an issue at the moment. And in fact, there was a speech given today by one of the deputy governor about the fact that households were fine. There weren't nothing to see here. Households were fine. So, nothing to see. I don't think 1% is likely, but I do think there is a risk that the Fed, if they go 75, will put more pressure on the RBA, but I think they'll probably do 50. That would be my guess. Vincent says, central bank digital currency total monetary control policy. It is. That's exactly right, Vincent. Yeah, I agree with that exactly. That is precisely the problem. You ultimately end up with them holding all the levers and all the keys effectively, and you've got to ask yourself the question: have central banks been successful over the last 20 years or so in doing the things that they should have been doing? The short answer is no. They didn't actually deal with 2007 and 8 properly. They did quantitative easing, and then they did ultra-low interest rates, and then they did more quantitative easing and ultra-low interest rates when we had COVID, and they sort of swamped the economies around the world with massive amounts of funds. That's created inflationary pressures, and now they're trying to put controls in place to try and deal with the inflation. Then, of course, we had the Russian conflict and the supply chain issues from COVID. And, of course, one of the questions we keep wrestling with is to what extent does lifting interest rates fix supply chains? The short answer is it doesn't. What it does do is turn back demand. That, in turn, can have a bit of an impact on the overall outcome in terms of where the inflation goes. But inflation is too strong. Inflation is going to continue to rise for some time, I think, and not just in the US, but also here. And hence, I think that they're looking for additional tools, and central bank digital currency, that looks a pretty attractive tool. Well, why wouldn't you? Now, it's one from Enriquez here. Will the RBA lose control of the yield curve if you don't hike enough and be forced to yield curve control? Well, they've basically said there was a review done quite recently by the RBA on yield curve control, and they basically said, well, it sort of worked for a bit, but then we gave up. The review that was done in the US, which was a more thorough review by the Fed, one of the Feds in the US, basically said didn't really work other than on a very narrow basis. And the conclusion from the Reserve Bank is they'd probably be unlikely to use yield curve control again. They would probably use some other levers to deal with it, particularly, of course, quantitative easing and bonds, bond issuance, etc., etc. I think there's a significant possibility that we will see more QE later. I think we'll probably see rates come down again later as they try to deal with the recessionary fallout of the very high rates that they're going to impose in trying to deal with inflation. And I'd make the point, going back to crypto, that this sort of chain of uncertainty with high rates, low rates, is not good for the crypto as well, because effectively it's going to put a lot of pressure on other sectors of the economy, including crypto, in my mind as well. Cookie Boy asked this question: is the RBA worried about a lower Aussie dollar? I think they are, as it would mean more inflation. Well, of course, yes, as the dollar comes down, you import more inflation. So if you think of the cost of oil, as it's translated into local dollars, then that is actually going to put more upward pressure. So there is certainly a concern. And some people have argued that one of the reasons why the RBA is doing what they're doing is because they are trying to keep the exchange rate up, relatively strongly. The issue here is if you've got very strong movements in the Fed, for example, and the US dollar is very strong, you've got to follow suit if you want the Aussie dollar not to fall too far. And there are some people suggesting it could fall as low as 50 or even 40. I'm not sure it's going to go that far, but it certainly could be a bit of a problem. But if it did, the inflationary fallout of that would be pretty dramatic, and also would have a pretty bad effect on our exports as well, which is something else that people need to take account of. Just have a drink, excuse me. Let's see what else we've got here. Very interesting question here from Source, can you actually call reducing interest rates or quantitative easing tools? It's just a matter of adding or subtracting digits to a number. It's hardly got anything to do with a program or tool. Well, that is true. It's a very blunt instrument, of course, but it does effectively, if you print more money, or if you buy bonds, which is putting more liquidity into the system, you can drive interest rates down in the short term. I argue that one of the main reasons why rates went down, though, was the term funding facility. That was the very, very cheap money that the RBA lent to the commercial banks, which allowed them to fund their lending book very cheaply. Of course, what those commercial banks actually did was to lend out some of it, but most of it is sitting back in the central bank in their exchange settlement account, and they're earning quite nice interest on it. Thank you very much. That was never intended. So I've always had the view here, you should be putting a windfall tax on those returns. That was never what it was intended for. And they'll be holding that until they actually have to pay it out in the next year or two. Another example of the RBA, I think, not pulling the levers correctly. And I made a show the other day, I wonder if you saw it, but when I talked about the fact that the board at the RBA is comprised of a couple of economists, and Phil Lowe and a few others, and a guy from Treasury. But then you've got these, what I call them part-time amateurs, business people who got a good business brain, obviously, but they're not going to necessarily understand the nuances of monetary policy. And the question is then, does our bank board at the Reserve Bank really have the credibility to be able to actually make good decisions? And the arguments were made, well, there's a review coming up, Chalmers is going to review them, so maybe the answer there is to consider how to deal with this and maybe have a different structure for the board. Don't know, it seems to me it's an obvious thing to look at, because comparing it with some of the other boards around the world, we seem to be underpowered, frankly. Or maybe it's deliberate, because basically that puts more power in the hands of a smaller number of people, the guy from Treasury and, of course, Phil Lowe himself. And maybe that's part of the plan, because, of course, Phil Lowe is the only guy who gets rolled out, or maybe the deputy going to the Senate. Everybody else is just pretty much, backseat drivers, really. Okay. Very interesting question here, which I'll put up now. Do interest rates need to be above inflation rate to actually bring it down according to their mandate? The answer is the theoretical view from those who actually look at this closely is, if you really want to get inflation under control, then you need an interest rate above the inflation rate. That is absolutely right. And there are some curves that are out there that shows that if you don't do that, what you end up doing is effectively breaking the economy without fixing inflation. But that would mean a massively, massively high interest rate, right? Typically, an interest rate would have to be 6 or 7 or 8%, which means a mortgage would be 10% or slightly more than that. That's a huge impost on people who, when they took the mortgages out, they were getting at 2%, right? And so the question is, well, would the Reserve Bank really do that? Could they do that? And I think the short answer is, well, they could, but they would break the economy if they did that. That would cause a recession like you wouldn't believe. But it is clear that that is what you would need to do if you really wanted to snuff out inflation quickly. And, of course, the Reserve Bank is still arguing that the inflation is temporary, right? It's something which will dissipate on its own. And it's partly a trick of numbers, right? Because basically it's the rate of change of inflation. So if, inflation goes up, and that goes up for a period of time, if then you don't get any further increases, it goes sideways and then it comes down again, the actual inflation rate drops away. The problem is that you're on a high plateau, because what that basically means is you're still paying a lot more than you were. So you could be in the situation where the inflation rate, the headline inflation rates, come down maybe even 2 to 3%, which is what they want. But the amount you're actually paying as householders and businesses is still very high, because those costs have gone up and stayed up. So in a way, even targeting the inflation rate has its flaws in terms of trying to actually understand how to actually control the economy. I have a big problem with it personally, but that's something. But again, around the world, everybody does it like that. But it's a bit of an artificial construct. And of course, if you look in New Zealand, where they've been at it longer, there the inflation rate is still pretty high. We're seeing home prices slide, and we're seeing other things, working quite negatively. And yet, Adrian Orr, the governor in New Zealand, is talking about putting rates up even higher. More rates in the US, of course, and even in the UK, they're talking about putting up again. So we'll see. Lawrence asked this question, a very nice one. Is there latency concern in regards to moving rates too fast? Yeah, absolutely there is, because it takes 3 to 6 months minimum for these changes in rates to work through. So, for example, if the Reserve Bank puts the interest rate up on the first Tuesday of the month and you've got a mortgage, you normally find the bank then gives you a period of notice, and then the period of notice, once it's ended, you then have to tick through the numbers of weeks until your monthly payment is made. So that's typically 6 to 8 weeks. So mortgage rates might be charged higher from the date of change, but you don't actually see the impact on your cash flow for a few weeks. And certainly around the world, you'll see that quite often it takes 6 to 9 months for the true impact of these rate changes to really hit the economy. So at the moment, the central bankers around the world are trying to move so fast, they don't have the compass necessary to measure. Now, there are some nowcast calculations done in the US and some of the Feds, like the Atlanta Fed, and they try to use current data to try and forecast what's going on. And it's interesting that the Atlanta Fed's most recent nowcast was talking about a recessionary outturn the next quarter. So, it could well be that actually the US is already in recession. It's just that nobody knows it yet. And certainly here in Australia, where are we? Are we in recession? Are we not in recession? Who knows? And of course, here in Australia, we've been protected by very high prices for our exports, particularly liquid natural gas and iron ore and those sorts of things, and coal to an extent. But if those prices continue down, and iron ore is, how I was looking at it earlier on, let me just get this. Iron ore is what? Here we go. Let's put this one up, shall we? Yeah, so iron ore futures in Singapore at the moment is down to 105.26. And just to bear in mind that in 2021, this is actually in July last year, it was 218.86. Massive fall. And, that means that essentially there is a significant question in my mind about whether we will see those high returns coming back to us. And that means that our terms of trade could go quite negative too. So, yeah, the short answer is no, there's not enough time. I'd make another point. The RBA keeps using customer survey data, household survey data from Hilda. And the Hilda data is close to 3 years old. So that was before COVID. That was before the last run-up in home prices, and that was before the most recent falls in income growth. So the Hilda data is way out of date, and yet that's what they rely on when they actually come to talk about all of the things that are going on when it comes to the question of household finances. So it is quite interesting that they've got lagged data. And they also cherry pick, of course, because they use securitized data pools as well. And those securitized mortgages are not necessarily the same as all of the ones in the marketplace. Now, this is an interesting one here. Last year, the government sold me blocks of land at 1k per square metre. Now the government wants 1.8 per square metre in the same suburb. Basically, now they want nearly 900k per block compared with 450k. Building costs up 30%. Any thoughts? Yes, the short answer is, and thanks for the super chat, by the way, the short answer is this is a classic problem that we're seeing again and again and again, that essentially the cost of building, the cost of land, all of those things are significantly higher. I did a show the other week about the fact that many households who signed up to get a home land package ended up with not getting what they expected because the building costs are about 30% to 40% higher. The duration of the build is blown out by about 30% or 40%, and many builders have gone bust. This is not sustainable. And unfortunately, a lot of it's being driven by that underlying price of land. Just bear in mind, of course, that there's a lot of fees attached to developments too. And one of the things that Edwin quite often says is that, if you really wanted to deal with some of those costs, what you do is actually reduce some of the council-related costs, because to actually go into the construction mode is hugely expensive. Stamp duty doesn't really, cut the mustard in terms of dealing with it. So yeah, there's a lot of big issues there. Other point I'd make is that building failures are running through the roof. We know that there are a number of other builders that are really struggling at the moment. And the question is, what will happen if you've contracted with one builder who then goes bad? Do you have sufficient insurance and indemnity to be able to complete the construction cycle? And interestingly, I was talking to someone today who's gone through that, whose price of land is now down again. So what they bought at when they actually signed up and what the land is now valued at today, it's dropped by about $200,000, which means they've got the worst of all possible world. So yeah, it's a real mess. Very much. Okay, let's just see what else we've got. Okay, Cookie Boy says, property prices at the top end of town seeing big price falls, I think. Will it filter through to the low end? It will, yes. So it tends to trickle down from the top and essentially work its way down through the rest of it later. It's true, very true in my mind, that essentially what we will see is a considerable number of falls. It's actually quite widespread, and Cookie Boy's put a few of these up. I might just put one or two up here, and maybe we can talk about them. Let me see whether this works. Can I do this? Yeah. So this is one at Hamlin Terrace, New South Wales. It was 990,000 now on the 13th of July. It was guided at 1.2 million on the 20th of May. I want to highlight here, they quote the gross rental yield. Of course, the gross rental yield isn't that useful. The net rental yield, which is after the costs and everything else. Mr. Stokes has just arrived. Hang on a moment. Just 1 second. Let me see whether I can connect with Mr. Stokes. Mr. Stokes. Hello. Oh, just bear with me, folks. We're just trying to bring Adam in now. Hang on. Hello. Adam, I can't hear you. Connecting to audio but cannot hear you yet. Hang on. We'll get there. Still connecting. It's still connecting. Sorry, folks. We're just trying to negotiate our little conundrum. Adam. Sorry, I can't hear you. Still connecting to audio. Yay. Hello.
And we should be good now.
Hi. How you doing? Can you hear me? I can hear you.
Okay, I got you.
Yay.
I'm here. I apologise. It's been pandemonium at this end, Martin. I apologise to you and the audience. Completely my fault and a little bit of IT, but we'll go from there. I thought I'd watch you present the whole show, though, and I'd come in the last 10 minutes and save the day.
Adam, it's good to see you. Thank you very much. I was just about to switch on and talk about property prices because I'd pretty much done my dash when it came to the crypto. I think I did. I held my end up quite well.
You did really well, and I can testify to that because as my computer was doing its thing, I was listening to you, and I actually nearly turned on the camera on my phone to talk to you via the phone. I thought, no, I can do better than this. So 15,000 resets later, here I am.
Adam, well, thank you very much, and it's good to see you on. So, look, I guess there were three questions I wanted to explore with you tonight. And by the way, congratulations for getting your YouTube channel back on YouTube, right?
Thank you very much. It was very stressful.
Yeah, we should just explain to everybody that you got basically chopped by YouTube for nearly 2 weeks. They still haven't given you a reason, right?
That's right. Automatically deleted. I woke up one morning with a barrage of emails and messages saying your channel's been deleted. I said, oh, no, it can't be. I've never even had a strike. I've never had a warning. And sure enough, I went to check my channel. It said it was an automated response saying your channel has been deleted for repeat or severe violations. Again, having never had a strike or anything gone wrong, I wrote to them. It's all very automated, noting that they've got tens of millions of presenters or channel hosts out there. I heard nothing for 15 days, and then eventually I said, can I have a point of contact in Australia to commence legal action? 9 hours later, the channel was reinstated. So I have no idea, Martin.
Well, it's good that you got back, and you still got the community that you had on your channel, which is good too. So, question one for you, Adam. A number of people in the chat and previously said Bitcoin and crypto are not the same. Discuss.
Yes. Okay. It's true and it's untrue. So most certainly, believe it or not, there are only in fact 3 cryptocurrencies. They are Bitcoin, Litecoin, and arguably Ethereum. And because we're talking purist talk here, so at its essence, Bitcoin stands alone and there's no other coin like it. Why is Bitcoin alone? Because you can't sue Bitcoin. There's no company, well, obviously there's a founder, but there's no founder that we can refer to other than a pseudonym of Satoshi Nakamoto. All these other coins, the reality is, Martin, currently there's 20,158 currencies that I'm looking at the moment. Of those 20,000, to make it easy, of those 20,000 currencies, 19,950 will absolutely collapse, no doubt whatsoever. Bitcoin stands alone. Bitcoin stands alone because it's not because it was first, it's because it's been around the longest. It's completely immutable. It's completely open source. It's completely incensorable. It's completely inclusive of everyone. And like the internet, how do you shut down the internet? Now, you might say, I'll shut down a server, but there's multiple servers on the internet. You might say the same with Bitcoin. You say, well, I'll shut down a node. It doesn't matter. There's thousands of them. You might say, well, I'll shut down a mining farm in China, and that's a good example. You cannot shut it down. It cannot be stopped, whether you like it or not. You can hate Bitcoin as much as you want. You can hate the internet as much as you want. It cannot be stopped, short of a nuclear holocaust that wipes out everyone and everything. Comparative to all the cryptocurrencies out there, they are more centralized by nature. They have a board of directors. They have people that we know. They have somewhere where the police or governments or authorities can crack down on them. XRP might be an example. XRP or Ripple, Ripple's a company, XRP is the token. That is going through the SEC at the moment, and it's being attacked saying, well, you're a security, we're not a security, we are a security. You can't do that with Bitcoin. It cannot be stopped. So the argument that I did here at the beginning of this video is, there's Bitcoin and there's everything else. And that is absolutely fundamentally true. But when you talk about the semantics, what is a cryptocurrency? Well, technically, Bitcoin, Litecoin, and Ethereum, but under the umbrella of all cryptos, you could say, yeah, they're all crypto. You could even, I'll actually do a translation to this, Martin. What is money? Now, some people will say money is only what government issues. You would say money has to be a store of value, a medium of exchange, and a unit of account. Well, if you talk to a kid, they will say a Pokemon card can be money, or shells, or beads, or jelly beans. Money is whatever the people determine it to be. And when we go to government sort of structures, they say, well, no, only the dollar, or whichever country we're in, only that's really money. The rest is just smoke and mirrors. So essentially, that's the difference. There is only one Bitcoin. Most of the other cryptocurrencies will fail. And Bitcoin, unlike all other cryptocurrencies, Bitcoin cannot, and I'm going to put it out there, Martin, will not be stopped.
Okay, so you can't turn it off, and it's going to be existing in some form, is what you're saying, right?
Correct.
Yeah. Okay. Well, that's quite helpful. I guess the second question then is, in the last month or two, right, not only have prices come down, but we've seen the collapse of a number of major entities, right? The Celsius network was the last one that went into bankruptcy, right? And one of the things that I observed, and I'll just, again, put this back up because I thought it was quite an interesting comment. These names here, right, the people who were actually the creditors of Celsius, they are cross-leveraged to each other like you wouldn't believe. Because if I looked at the previous bankruptcies and the previous disclosures, it's the same people, right?
Absolutely. It's sorry to butt in, but your research is right on the money. It is an absolute repeat of what the traditional financial sector has done. Now, you might be saying, well, the crypto markets are corrupted by the traditional financiers, and I would agree with you entirely. Crypto in its essence is pure, but where it's been corrupted is the Wall Street boys in the olden day financial systems and manipulations. They have come into crypto, and they've had a quick play with it. They've made a quick buck out of it, and they've broken it very quickly. So allow me to give you this analogy or example. The traditional financial system has developed, let's say, over the last 200 years. So breaking into some type of note that is putting gold into a vault and writing a note against it, then evolving into the delinking of gold and fiat, that being what fiat that we've got now. In 1971, we delinked it. Then we've got derivatives markets, equities markets, futures markets, all these different markets that essentially have taken around, let's say, 200 years to evolve. Now, crypto will go through all of that evolution, but in 200 months. So this is what's happening. What's happening is the traditional olden day, prehistoric and corrupt financial systems that have got us to where we are at the moment, which is the collapse of fiat, hyperinflation throughout the world, a money that is backed by bombs and bullets instead of mathematics and the free market, that is coming to an end. All fiats collapse. No matter who you are, what flag you fly, what language you speak, all fiats collapse. And the US dollar is about to collapse. It's happening right now. Now, crypto has gone through that entire financial experiment, if you will, that history. Instead of in 200 years, it's happening in 200 months. And my friend, what I see that's happening is we're going to have Bitcoin catching up to what the traditional financial markets have done, and Celsius is a sound example of exactly what you just said, of what we're saying here, where Celsius, they cross-leveraged all these arguably dirty players or immoral players. They cross-leveraged with each other and they made a quick buck using everyone else's money. And what have we got? We've got the 2008 global financial crisis within crypto, but in a smaller economy. Well, guess what? Now we're moving on beyond that. And the antithesis to all of this, Martin, it goes back to Bitcoin. And it goes back to your first question. Why are we using centralized bodies that can corrupt these financial systems? So I'm the first to put my hand up and say, we do not need Celsius. We do not need 19,500 cryptocurrencies that will collapse. But I'm concurrently a believer in the free market. If you want to put your money in a centralized body that can corrupt your money, break it, steal it, do whatever they've done with it, as we can see with the banking sector, with fiat, with Celsius, that's actually your choice to do that. Now, what I'm doing on my channel and through my education, I'm saying, don't trust people. Don't trust me if you don't want to. Don't trust you. Don't trust the banks. Don't trust the governments. And I don't mean this in a rise up and be violent way. I'm saying put your trust in an open, immutable mathematical code. And that mathematical code is Bitcoin. Now, if you look at all the pullbacks in the markets, Bitcoin's not hurting. Now, you might say it's hurting. You might say, well, hang on, Adam, it was 60,000. We're talking US dollars. It was 60,000 and now it's 20,000. Well, I'm still up hundreds of thousands of percent from a few years ago. So sure, I'm down 2/3 from 18 months ago, but I'm up hundreds of thousands of percent from 10 years ago. So am I really up or am I really down? Now, what I see, and I think I heard you say this as I was trying to reset my computer here, I think that you're going to see this recover much quicker than what we've seen in the past. We certainly did couple with the markets. We coupled with the traditional markets, but it's smoke and mirrors. It's not actually a true coupling. What I believe will happen, not financial advice, just my opinion, and what my data shows, is that you're going to have a very quick decoupling. Just as they coupled, so you had Bitcoin standing alone, it then married up with the traditional financial markets because the Wall Street boys and the old systems, they corrupted it and they made a big buck. But now they're going to decouple again. They're going to decouple very quickly and they are going to recover, in my opinion, much faster than the traditional financial markets. Why? Because crypto never sleeps. And more importantly, it's all inclusive of everyone. Banks, you have to have the right paperwork. You have to have shoes. And I'm not being facetious with that. Many banks won't let you into their branches without shoes. Bitcoin doesn't care about paperwork or shoes. Bitcoin allows anyone with an internet connection to be part of this financial system. And that's currently about 4.78 billion people on planet Earth that have access to an internet connection and 1 cent. If you wanted to be part of a bank, well, there's not that many people that have papers to get into a bank. And believe it or not, there's some people, or a huge majority, a huge portion of people in the world that don't have enough money to open a bank account. Then if we go into trading, if you want to trade in the equities market, as an example, traditionally or typically you need $500 to buy in and out, plus the $30 fees. Well, in crypto, you need 1 cent, and the fee is almost nothing. So just as I'm speaking very quickly to try and catch up with everything that I've missed tonight, the markets themselves are moving so quickly, the technology is moving quickly, and crypto isn't getting weaker. Don't focus on the price. Focus on the evolution. Focus on the adoption. Focus on the use cases. Focus on what the institutions and the governments and the individuals are doing. Then when you see that and you contrast it with what fiat is doing, you can see that the price doesn't matter. The price at the moment is just smoke and mirrors. In my opinion, you are going to see a massive recovery and Bitcoin will always be at the top.
Yeah, I knew you were going to be positive towards Bitcoin, and I understand why. I got two questions for you. The first one from Kieran, who asked a little while ago, is why is Bitcoin priced in dollars?
It's not necessarily priced in dollars. It's just priced in what we understand. So it goes back to what we've always discussed. What is the peg? What is the anchor point? Yep. So if you trade on Australian markets, you compare it to Australian dollars. If you trade in Europe, you look at euros or pounds or whatever. The reason why we regularly, and it's a good question, but the reason why we regularly speak about the US dollar is because the crypto markets are so international. And what's the number one currency in the world? Well, it's the US dollar. But mark my words, in the future, our anchor point will not be the US dollar. It won't be any dollar, because what's a dollar worth? I mean, a dollar is worth something today and something else tomorrow. And a dollar in Australia is worth something here differently to what it's worth in Somalia. But when it comes to Satoshis, that is a Bitcoin cent, so there's 100 million Satoshis in a Bitcoin. And my prediction, and I'm putting it out there, could be wrong, but I'm putting it out for the world to hear on live streaming YouTube, the anchor point for the future will be Satoshis. It won't be the dollar and it won't be the yuan. It will be Satoshis. Why? Because it cannot be manipulated by governments. They cannot be artificially inflated or deflated. And most importantly, Martin, anyone, anywhere, at any time, of any age, with any education, can look at the open, immutable, open source ledger and say, this is how many Bitcoins there are today, this is how many there'll be tomorrow, this is how many are moving, and this is how many are stationary. Not even the most powerful government in the world can do that with their own money. The United States of America doesn't know how much money they've got. They've got an M1 and an M2 money supply, and both those money supplies have got so exponentially insane that they don't even know how much money they've got. Now, if you're a business, an individual, or a government, imagine the power of being able to forecast your finances if you knew how much money there was in the world, comparative to what we've got at the moment, this absolute corrupt circus of a money printer printing money that without limits into an economy that we don't know how much money is in there, with ever-changing demands and everyone fighting to be the global reserve currency. Which puppy dog have you got there?
No, this is Meteor. She decided to come and she liked the sound of what you were saying, Adam. She wanted to come and join in.
She's a wise dog. I approve.
Okay, here's another question for you. And thank you very much to Jason for the super chat. Adam, what happens when ISO 20022 is introduced and enforced in the next 2 years, and Bitcoin is not allowed to move money due to it not being ISO 20022 compliant? How will this affect the price of Bitcoin?
Okay, great question. ISO 2022 is an international standard that has been essentially written by the bankers saying this is the money that we're going to allow. So it's a good question, and it's a question that we all have to answer. Who says that they get to choose what the money is? So we have international standards for everything. We have international standards for steering wheels and tyres and which side of the road we're going to drive on, depending where we are. And the reason why we have ISOs is because it streamlines how we do business across the world. Now, what's interesting about the ISO 2022 document is that they really talk about XRP and Stellar. So within that document, this is what's unique about that document. Within that document, of which I have read, they actually specifically refer to certain cryptocurrencies that these financial overlords say, well, you know what? We're going to choose which money you use. We're going to say that amongst planet Earth, if it's not going to be the US dollar, so that in itself admits that the US dollar is going to collapse. Because why do we need the ISO 20022? And it's a difficult document to say. Why do we need that when we've already got the US dollar? That document in itself admits that fiat is collapsing and the US dollar will not be the global standard. It admits by default that the SWIFT network will not be the international standard. So just because they say that you have to use their money, which may be Ripple or XRP or Stellar or whichever coin they choose, doesn't mean that everyone will abide by it. So the answer to that is, who's going to enforce that document? At the moment, the enforcement of the use of money around the world, the global reserve currency of fiat, that being primarily the US dollar, the petrodollar, and the SWIFT dollar, that is the SWIFT network dollar, that is enforced with bombs and bullets. That may be confronting to many people, but it is a matter of fact. The reason why we use the US dollar is because if you don't, you can expect aircraft carriers at your doorstep. Go ask the good people of Iraq what happened to them when they tried to break away from the US dollar. Oh, weapons of mass destruction, wipe out the leader. Oh, sorry, there are no weapons of mass destruction. So ultimately it comes down to this. It's a fair question. Who's going to enforce that document? And who gets to choose which money they use? Why do the authors of that document get to choose what money I use and you use? And more importantly, why would we go back to another currency, which is just a digital form of the fiat that we've got at the moment? Fiat is a complete disaster, and a CBDC is worse than fiat. It's worse than fiat because it allows the powers that be, whoever they may be. And the truth is, Martin, I don't know who's in charge. Is it the governments? Is it the banks? Or is it social media? I don't know. I don't know. But if they choose a currency and I say I'm not going to accept that currency, how do they enforce it? And the only way they can enforce it is with violence. That is the only way they can enforce me to use their money. If I've got a friend who wants to mow my lawn and I say, I'll pay you in beer, and they say, no, you've got to pay him in XRP, how are they going to enforce it? That's a micro example. You extrapolate that onto the macro example, and you and I have discussed this before. If the Chinese digital yuan becomes their currency and they say, hey, Adam, I want to buy a shipping container of sheepskins from you, and I say, cool, it's 2 Bitcoin, and they say, no, we're only going to pay you in yuan, I have the right to say, China, unless they use violence, China, I'm not going to accept your yuan. Brazil, I'm going to accept your Bitcoin. It's really a democratic question of what is money and who gets to choose who enforces it, particularly on the global stage.
Yeah, and I think that's exactly the point that's worth considering. Now, overlay central bank digital currency, right? Because, of course, that is precisely what many people, from the UN and from the Bank for International Settlements and others are arguing is the future, right? Why? Because they're perpetuating the old processes. May look digital, but it's the same top-down control, isn't it?
It's more control.
Yeah.
It's the exact same package. It's the exact same product repackaged, but it's repackaged in a super packaging where they can just put expiry dates on it. In fact, this is how powerful it is. Let's think about the recent lockdowns. If we have a digital CBDC, which links up to the ISO 2022 document, imagine we have another pandemic, which we probably will, and they say, you can't go across borders. Well, guess what? A CBDC could be so powerful that you could say, I can spend my money in New South Wales, but I can't spend it in Sydney. And a government could flick a switch and do that at any time. That is the power of crypto. So I'm saying, hey, that's the power of, let me rephrase that. That's the power of digital currencies. The power of cryptocurrency, Bitcoin as an example, is that no one can do that. No one can stop me spending my money where I want. Bitcoin is the absolute core of democracy, whereas ironically, Martin, a CBDC is the absolute core of tyranny.
Yeah, very interesting. And this came in pretty much as you were saying. I can't buy anything in the shops with Bitcoin. What's the point of having it? It's just to hope it grows in value to sell it later like a stock. Oh, he's just stopped. Oh dear. Would he come back? We're having a few technical problems tonight. That's a very good question from Danny. He's come back. Hello, you're back?
I had you the whole time.
Okay,
it's my end.
You froze.
Blame Canberra. I'm sorry. You still got me?
Yeah, no, it's good. Then you got the question. Did you get the question?
So it's a fair question, and I got it, and I can answer it quite comfortably.
Okay.
So when I was at university, I was working in a bar and in Australia, and an American came to the bar in Australia, and he bought a drink, and he pulled out a $20 US. He pulled out a $20 US bill, and he said, "Do you accept this?" And I looked at him and I had traveled a fair bit by this stage, and I understand that on the global stage, you can pull out the US dollar and use it in a lot of countries, particularly third world nations. Now, this good American was immensely offended that I wouldn't accept his US dollar in an Australian bar. So in that micro example, you might say, well, what's the point of the US dollar if I can't spend it anywhere? Now, really think about that. What's the point of the US dollar if I'm in Australia if I can't spend it anywhere in Australia? Just because my bar in Australia didn't accept that dollar didn't mean it didn't have value. More importantly, it didn't mean that it couldn't be converted. So that US dollar was and is the global reserve currency that he could not use anywhere in Australia, but it still had value. Now, in the future, and it's already happening, there are multiple places that do accept Bitcoin, but there are multiple places that don't. Just as there are multiple places around the world that do and don't accept the Australian or US dollar. We have to understand that we are now a global village. We are an international community, and we are looking for one currency. Now, conversions can happen very quickly in the background. So you might say, well, I go down to Woolworths, I want to buy a loaf of bread, and they won't accept Bitcoin. Well, if you've got a credit card from, as an example, the product already exists from CRO, crypto.com, you can have Bitcoin on your credit card. You can go to Woolworths and buy a loaf of bread, and it will automatically and instantly do the conversion for almost free, where I could use Bitcoin to buy a loaf of bread in any country on planet Earth. And that's a key thing there. So we already have a global reserve currency, the US dollar, but it keeps printing. And we can already use that global reserve currency anywhere in the world through a credit card. When I travel internationally, I already use a credit card. And if I use a credit card in Spain or Australia or England or America, it doesn't matter. I tap at the counter, they accept that money, an electronic conversion happens in the background. 15 banks along the way take a cut of it. They determine the exchange rate. They take the commissions. They take the fees. And it's actually a very slow and cumbersome system in the background because there's so many middlemen. Well, we can have the same model, but instead of having 10 middlemen with 10 different banks doing 10 different conversions and taking 10 different fees, why not just have Bitcoin? And that Bitcoin can be used anywhere on planet Earth on any point of sale terminal at a speed of light conversion with a micro fraction of a fee with a fairer conversion rate than what we've got at the moment. Bitcoin can be accepted at many places. You can already do it through credit cards, and more people and places are accepting crypto.
Yeah, very interesting. Now, there's a couple of follow-up conversation points. The first was Bitcoin sucks for microtransactions, and the other one was the Lightning Network and how that plays into this.
Okay, so currently, yes, it does. If you're not using the Lightning Network, Bitcoin, just like gold, absolutely sucks for microtransactions. But with layer 2 solutions, no, they don't. And the layer 2 solution that they're referring to is the Lightning Network. So the real power of Bitcoin, or we'll stick with Bitcoin at the moment. If I buy a product for half a cent or $500 million, the fee is the same. Now think about a bank. First of all, we don't really do half a cent transactions with a bank, but with crypto you can. And you might be thinking, Adam, why on earth would I want to do a half a cent transaction? Well, imagine a Netflix subscription where instead of paying $30 a month, let's say I watch 5 movies, and each of those movies, if it's a good movie, it's $1. I could do that transfer immediately. But if it's a really crap old movie, I could do a transfer for half a cent. It could be an article. It could be something I read. It could be a temporary membership into something where I just want to trial it. The future of money is in fact not big transactions, but microtransactions. Why? Because it'll include the second and third world into the global economy, where we can have these fractions, a millionth of a cent transaction. Now imagine you're a business and you say, well, why would I make a product that only gives me half a cent or 10,000ths of a cent? Imagine a world of Instagram, as an example, where if you want to look at a photo from someone on Instagram, you only have to pay 1/10 of a cent to look at a photo. Now, for you and me, I don't know about you, but I don't really care about 1/10 of a cent. But if I'm an Instagram creator, and I'm only using Instagram as an example here, imagine I've got a platform where instead of getting 5 million hits and getting nothing in return, I get 5 million times 1/10 of a cent. Now, open that to everyone in the world, the 4.7 billion people with an internet connection, it creates huge amounts of commerce and opportunity for both the customer and the provider. The provider can make a business that enables pretty much the whole world to be part of it, and the customer doesn't have to join up in this old subscription model of me being forced to pay $30 a month when I'm only using 3 or 4 movies as an example using the Netflix. Now, when it comes to the layer 2 solutions, think of gold. How do I do a microtransaction in gold? Well, what we do is we actually put a banknote against it. So think of a big block of gold. Think of an ounce of gold. What's an ounce of gold trading for at the moment? About 3,000 Australian dollars. If I wanted to do a $1 transaction with gold, that's arguably a microtransaction. But how do I do that? Well, what we did is we wrote banknotes against it. We said, this 1 ounce of gold, for argument's sake, is worth 1,000 of these $1, or 3,000 of these $1 bills. And every time we'd give a $1 bill to someone, that is in fact a layer 2 microtransaction. Now, when we digitize that example, you don't need to worry about a $1 transaction or a 1 cent transaction. You can do a 1/1,000,000th of a cent transaction. And most importantly, Martin, unlike the failure of gold, where the goldsmiths were writing 10, 20, 100 banknotes against the one piece of gold because no one was ever cashing in their banknotes to get the gold back. Because the blockchain, and Bitcoin in particular, is completely open source, the transaction is the verification. So we can not only have micro transactions that are very fast, but we can absolutely substantiate it where no third party can say, oh yeah, I'm writing 10 Bitcoin banknotes against this 1 Bitcoin, because no, with Bitcoin, everyone can see it and the transaction is the verification.
Right. No, I understand it. Yeah. It's a fascinating subject, isn't it? Because again, what you've got to try and do is to sort of stand back and not impose the old traditional world on the new. You've got to actually look at it.
Exactly.
Yeah.
That's exactly right.
I don't know what that move is, but it's like you got a different perspective. You need a different perspective to be able to understand how it actually works.
What we really need to consider, Martin, is that, and I really put this out to the viewers, I understand a lot of your viewers don't like me, and I get why you don't like me. You don't like me because you think I'm trying to shill Bitcoin. I don't care about Bitcoin. I care about democracy and freedom and truth and honesty. And that's why I love Bitcoin, because it's completely open, immutable, and all-inclusive, and you can't lie about it. Money you can lie about, the news you can lie about, everything you can lie about. We are constantly fed lies. Now, Bitcoin doesn't lie. How much is a Bitcoin worth? 21,000 US dollars. Why? Because that's what the market says it's worth. How many Bitcoins are there? 21 million. How can I prove it? Because it's on an open, immutable, open source blockchain. It's not that I'm go Bitcoin because buy low, sell high. No, not at all. When you first come into crypto, that's what you think it is. You think I'm going to buy Bitcoin low and I'm going to sell it high, because exactly as you said, Martin, we carry this paradigm of, well, that's what shares are. Bitcoin is not a share. Bitcoin is a global future payment system. It is not just a store of value or a medium of exchange or a unit of account. It is a total, complete, inclusive, functioning, impenetrable financial system that anyone, anywhere can tap into without any permission from anyone. They can't be blocked and they can be part of it. Now, for those of you who choose fiat, I personally think you're insane. I think you are absolutely insane. And this is coming from a guy with a degree in economics. I've served in uniform. I've been on operations. I've made a lot of money in crypto. I've made a lot of money in the traditional stock exchange. And concurrently, I've lost a lot of money in fiat, and I've lost a lot of money in crypto. Crypto is fair. Fiat is fake. The absolute irony with everything with Bitcoin is most of the projection that's put on Bitcoin, where they say it's a Ponzi scheme, it's a pump and dump, it's fake, it's not real. The irony with all of those allegations, Martin, that's all fiat. All of those allegations are the dollars that we use today. And I can prove it. I can prove that your money constantly goes down in value. I can prove that all fiats continually fail. And conversely, I can also prove that Bitcoin is always going up. And you say, well, again, going back to the example, you say, Yeah, but it's down over the last 6 months. Don't worry about that. Look at where it started. Look at where it's going. Look at the adoption. Look at the supply. Look at the fundamentals of supply and demand. Look at the fundamentals of money. Look at the fundamentals of fiat. Bitcoin is not the scam. Fiat is the scam. And part of the reason most of the viewers out there are angry, they're not angry at me. They're angry that they've been lied to for the majority of their life. I was lied to. You were lied to. We are continued to be lied to. And the antithesis to all of it is Bitcoin.
Yeah, absolutely. And a few people in the chat saying some very positive things, and others saying some very negative things. As always, Adam, which what you'd expect. So I'm not going to bother to put them up. But Vincent asked an interesting question, and he'd like to get your thoughts on the upcoming ETH code merge, and how's that going to affect Bitcoin?
Okay, so he's talking about the Ethereum merge. So they're not competing with one another. So there's only one Bitcoin, and in the 2017 cycle, there's many competitors to Bitcoin. There was Bitcoin Cash, Bitcoin Gold, Bitcoin Black, Bitcoin Diamond. And why did Bitcoin win? Because, as I said at the beginning, there is no Bitcoin company. It's just a mathematical code. It's a completely inclusive mathematical code that just says these are the rules, who wants to play, and no one can mess with it. Bitcoin should be considered the gold of the crypto space. Ethereum is like the oil of the crypto space, or another way to look at it is Ethereum is like a supercomputer. Ethereum at the moment is not operating very efficiently because if you want to do anything on Ethereum, on this global supercomputer, you have to pay gas fees. You might look at gas fees as like a transaction fee. So if I want to tap into the world's supercomputer, arguably Ethereum, and I want to do some type of transaction on that supercomputer, just like using a toll on a road, if I want to use that road, I have to pay a toll. And just like at certain peak periods, tolls can be dynamic. That is, if the road is really clogged, the toll might go up. And Ethereum's the same. If the Ethereum supercomputer is really clogged, the toll might go up. So some transactions I've done on Ethereum have cost me $500. And you say, well, why on earth would you pay $500 to do a transaction on Ethereum? You're crazy. Okay, well, let's go back in history. Why on earth would anyone ever pay $500 to make a telephone call? Well, when international telephone lines first were established, big businesses were paying $500 to make a call from England to London. I mean, go back to my childhood. I can remember calling grandma in England, and the call was like, it cost a fortune because you had to tap into this phone network that was very unique and very niche, and it cost a lot of money to get into. So over time, we can see calling England, tapping into this phone line example, it costs hundreds of dollars to do. Now we transfer this over to the crypto networks. Currently using Ethereum at certain times, it can cost hundreds of dollars to tap into that network and use a transaction. But over time, the fees come down. And part of those fees coming down, just as the phone networks went to digital, so networks now work on the internet, the same thing is kind of happening with Ethereum to the merge. It's now going from Ethereum as it is at the moment, which is proof of work, to Ethereum proof of stake, which is less energy intensive and more efficient. But the issue with Ethereum, Martin, and to the viewer out there, Vincent, I think you said it was, unlike Bitcoin, Ethereum has a lot of competitors. So will Ethereum be the supercomputer for the future? I don't know, because there are some very good competitors. Its number one competitor is arguably probably Cardano, and then you've got Solana, you've got Algorand, you've got Polkadot. There are all these competitors who want to be the supercomputer of the future, or the Ethereum or the digital oil of the future. But what Ethereum has over all the competitors is network effect. Most things are built on Ethereum. So currently the market, of which just crossed over $1 trillion today in crypto, 40% of that is allocated to Bitcoin. So $400 billion of the $1 trillion market is within Bitcoin alone. And around $300 billion, or a third of that market cap, is centralized around Ethereum and everything that's been built on top of Ethereum. So although Ethereum is only one platform, there are lots of other coins that have been built on it. So when the Ethereum 2.0 comes out, the merge as they call it, or the consensus algorithm, they say that it's going to be far more efficient. But this is the issue. they've already admitted that the fees won't go down. So in my mind, the race for Ethereum 2.0 isn't in fact going from proof of work to proof of stake, or Ethereum going to the consensus algorithm, but rather who's going to get the fees down from $500 or even $50. Sometimes it's $10. It's not always that expensive. Sometimes it's $10 to 0.0001 cent. And that's what the competitors to Ethereum are doing. They're saying we can do everything Ethereum does, but we can do it at 1/5,000th of the cost. But if you don't have network effect, what does it matter?
So just so I'm clear, I understand Bitcoin and the immutable ledgers because it's millions and millions of versions all over the place, right? Which means that it's immutable and outside the control. You talked about supercomputer for Ethereum. That sounds like something central to me.
Not necessarily, because at the moment, in the first instance, when you've got a proof of work algorithm, you've got lots of different miners. The miners are the things that the media gives a lot of crap about. And they say, oh, it uses so much energy. But by the way, Bitcoin doesn't use anywhere near as much energy as the gold industry. It doesn't use anywhere near as much energy as the banking industry. And guess what? It doesn't use anywhere near as much energy as tumble dryers, Martin. I never see any of the media going crazy saying tumble dryers are using so much energy that are destroying the world. But they're, of course, first to talk about Bitcoin using energy, which is far less than tumble dryers, and that's because tumble dryers aren't competing with banks, whereas Bitcoin will replace banks. So of course I have to say that it's bad. But to answer your question about the supercomputer, no, it's not centralized. Okay. It is a decentralized model where you have my computer, your computer, someone else's computer, all contributing to this immense computing power, this computational power with nodes all around the world on a blockchain that everyone can see and everyone can build upon to primarily build what we call smart contracts. Think of a dumb contract. A dumb contract might be a vending machine. I put a dollar into a machine, I click that button and a can of Coke comes out. That's a dumb contract. A smart contract is basically a Coke machine on steroids. It can extrapolate way out to do way more things than a Coke machine could do. But the computational power, instead of coming from one building, it comes from the entire network. And who's on the network? Anyone. Not a bank, not a company, or a bank and a company and everyone. It's all inclusive.
Okay, no, thanks for that. That's good to understand. As with all of these things, again, lots of comments in the chat, which I'm not going to put up, but a lot of people with different points of view. But this one came up, I think it's worth exploring just briefly. How can we trust any transaction on any of these crypto exchanges? So is trust important first? And if it is, how do we trust?
We actually have to refine the question, because the question was, how do we trust the exchanges? And that's the key word there. That's the key noun. Exchanges. What's an exchange? An exchange is a centralized body that's controlled by people. You might look at Celsius as an example. So how do we trust them? Well, I'd invert that and say, well, why do we trust banks? And we trust banks because they've always been there and they're the authority and they give us statements and the government endorses them and they've got all the money. So why do we trust banks? And you would just translate that to, why do we trust exchanges? Now, initially, when they're new, we don't trust banks because, just go back in history. I wasn't alive, you weren't alive, your grandparents weren't alive. But initially, I think about the trust of saying, why on earth would I put this block of gold into that person's bank or vault, and then they give me in return a piece of paper? They would say, you are insane. You are nuts. I'm not doing that. Well, over time, we built the trust in the banks. And over time, they broke the trust by delinking, first they broke the trust by writing multiple notes against the same piece of gold. But later, the trust was broken when the government, Nixon, in 71, delinked gold from money altogether.
Yep.
So as we evolve, we'll learn to trust exchanges. Now, exchanges are exactly that. I'm exchanging this for that. I'm exchanging my dirty, broken, corrupt fiat for the pure, decentralized Bitcoin. But remember, that's not the only way to get Bitcoin. I can mine Bitcoin or I can be paid in Bitcoin. So if you want private consulting from me, you pay me in Bitcoin or we don't do business. Now, of course, there are some exceptions to that, but I choose to be paid in Bitcoin. Now, and no, I'm not void from tax from that. I absolutely pay tax on my crypto holdings. In fact, at the moment, I'm kind of paying twice. I pay when I receive it and I pay when I liquidate it. But exchanges in the future, they will be trustless, just as Bitcoin is trustless. And this is where you have what's called a DAO, a decentralized autonomous organization. Just as we'll have self-driving cars, we'll have self-exchanging banks, and we'll have self-exchanging exchanges. But as we move way into the future, you actually won't even need an exchange. It's a prehistoric paradigm. Why would we need exchange when we've got Bitcoin? Bitcoin, everyone can see. And you say, well, how do I trust it? You just look at the ledger. How do we know how much money's in the bank at the moment? Well, we don't know, because that ledger, the bank's ledger, is held privately. Who gets to see the bank ledger? The board of directors. Who gets to see the Bitcoin ledger? Anyone. Now, I don't know about you viewers and Martin, but for me, I trust a mathematical spreadsheet way more than I trust a board of directors in a private for-profit bank that has gone through royal commissions and has laundered money for terrorist groups in wars that I've fought in. So I don't trust banks. I don't trust fiat, but I do trust an open, immutable source code that is Bitcoin, where it is completely and ironically trustless.
It's a very different way of thinking again, isn't it? It goes back to this.
Drop the paradigm. Drop the paradigm of the old money. It's all over. Fiat is dead. Let it go. Let it go, guys. It's over. It's okay.
And there was a question earlier on, which I can't find in the chat now, about the linkage between the crypto and stable coins, underlying assets, those sorts of things. And of course, we had a few examples of those sort of virtualized stable coins that they blew up, right? What's your take on all that?
Okay, so there will be more stable coins in the future. Stable coins are simply something that are pegged to the US dollar. So allow me to give an example of Kevin O'Leary. So Kevin O'Leary is a very rich, older traditional businessman who loves crypto, not for the buy low, sell high, drop that paradigm, drop it. It's not about that. He likes it because of the frictionless transactions. For example, he gave a talk on one of his videos where he was saying that he was going to do business with someone, and I'll make up the numbers here. Let's say the transaction was $1 million. And they said, right, we'll do business together. And Kevin said, okay, transfer me $1 million in stable coins right now. And they said, stable coins? What do you mean? And he said, well, just do the transfer right now. We'll make the deal happen. And he's a big businessman, very trustworthy, very public, and very successful. And it was a big deal. And they said, well, no, we don't deal with crypto. So Kevin O'Leary turned around and said, well, if you don't deal with crypto, I don't deal with you. And what he said was, I don't deal with banks. I don't deal with 3-day transaction times. I don't deal with transaction fees. I don't deal with the SWIFT network. I don't deal with blockages and stops. If you want to work with me, you pay me in a stable coin of your choice. I don't care what stable coin it is, and you transfer it. And what actually happened was this company said, all right, well, it's a big deal. Let's go figure it out. They went and bought some stable coins. Now, and remember, stable coins are exactly that. They are stable. So you don't have to worry about volatility. You don't have to worry about price fluctuations. You just simply say, I take this $1 million and I put it into a stable coin. And why would you do that? Well, it's for the same reason why we transfer information on the internet. If I want to send you a file, why on earth would I put it in an envelope, go down to the post office, put a stamp on it, put it in the post box, send it to you, wait 3, 4, 5, I don't know how many days it takes for the mail to get to you, when I could just email you the file? Well, the same is with stable coins. Why on earth would I go through a bank that only operates 9 to 5, 5 days a week? The transaction takes 3 business days. So if I do it on a Friday and it happens to be a public holiday, then it's going to take 6 days because I've got a weekend, a public holiday, 3 business days. That's a 6-day wait to send money from me to you, wherever you are in the world. We'll talk about international transactions here. Why on earth would I stick with that prehistoric model when I can put it into a stable coin and send it to you at the speed of light with almost no transaction fee? And again, whether I'm transferring $1 or $100 billion, the transaction fee is identical and the speed is identical. Any business who decides to stick with the olden day financial systems of the SWIFT network, they will collapse. If you and I were going to do business and I said, Martin, how am I going to get in touch with you? And you said, oh, just write me a letter. And I said, what? And you said, well, I don't have email and I don't have a mobile phone and I don't have a landline phone. Every time you want to communicate back and forth with me, I need you to write a letter and put it in the post. Look, I'd say, Martin, it's nice to meet you, but I actually don't have time for that. I'm running an international business here. I can speak to the world at the speed of light for almost free, or the speed of sound for almost free. I'm not going to go to a pen and paper to write love letters to you in a postal service that's prehistoric. That doesn't mean we don't need a postal service. It means that when I communicate with you, I do it digitally. And the same is with money. So how does this link to stablecoins? If you don't want to deal with Bitcoin, buy low, sell high, the future of money, fine. But if you want to work on the global stage to transfer money, why on earth are you using the SWIFT network? Why would you not just text money as you can with stablecoins? Now, stablecoins at the moment, primarily they're linked to the US dollar. Why? Because the global reserve currency of the world is the US dollar. But there are stablecoins that are linked to every currency. There are Australian stablecoins, Euro stablecoins, and you'll like this one, Martin. There are now bags of wheat stable coins.
Wow.
Yeah, and there are blocks of gold. So Pax Gold, as an example, that's a stable coin. So everything that goes digital is better. And anyone who disagrees, just think about what you're doing right now. You're watching all of this happening digitally. All your files on your computer are digital. Your computer's digital. Your telephone's digital. Your images are digital. Your movies are digital. Your sound, your music, is digital. Everything that goes digital is frictionless, or has less friction and less cost and moves faster. The only thing that's remaining to go digital is money. That's the last thing. And why is that? Well, of course, because it means it's the end of the banks. And who's got the most money in the world? The banks. So of course they hate digital. They don't want to evolve. They want you to use the SWIFT network. They want to hold that money. They want to get those transaction fees. They want to determine the exchange rates. And stablecoins bypass all of that in the interim. But mark my words, big call, in the future you won't need stablecoins. Why? Because the peg, as we've discussed many times, Martin, what is the peg? What is the anchor point?
Anchor point.
Well, at the moment, it's a US dollar that we don't know how much there is. They keep printing it. It keeps going down in value, and we're using that as the peg. That's the absurdity of it. We are using a limitless money that keeps getting printed that we don't know how much there is as the global peg. Well, the future peg will be a Satoshi. Why? Because it'll be a fixed supply. Everyone can see it. No one can print more of it. So to wrap that all up, at the moment, stablecoins are a very powerful tool to send money from point A to point B at the speed of light with no friction and almost no fee, whether it's half a cent or $500 million. You can make a stablecoin pegged to anything you want. You can have it pegged to Pokemon cards, bottles of water, bags of wheat, US dollars, Euro dollars, walks with your puppy dog, whatever you want, it can be pegged to that. But in the future, they will all collapse and disappear because you won't need them, because the global reserve currency, according to me, big call, no one upsets people, it'll be Bitcoin.
Very good. Now, I just want, no, it's got, go for it. You know, that's the whole point of having you on the show.
Just to interrupt, you know what's funny? And to the viewers out there, I love working with you, Martin. First of all, because you bring me into your world. And what's funny is when I come into, it's like you and I having a football match. So at the moment, I'm the away team and you're the home team. And when I go into your field, into your home stadium, everyone boos. Most people boo. But to keep all things equal, when you come to my channel, many people, they don't really boo for you, but they're just like, oh, he's still in the old paradigm. So, but you and I, as I guess good sportsmen, if you will, we're quite comfortable venturing into each other's fields.
Absolutely,
it's all in
it's all about exploring the the dimensionality. I mean, that's what this is about, I think. Now there was a very interesting comment here. I just wanted to put this one up before we end. My concern is the existing disparity between the mega whales and everyone else. Despite its decentralized nature, a handful of people control the price of Bitcoin. Now, I think that's a very interesting observation. Don't know whether you'd agree with it, but clearly there are a few people with massive amounts of shares, of holdings, as it were, and effectively can call the shots.
Yeah, it's a very good point, and it'll pass. So at the moment, let's contrast that with fiat. Who controls fiat? Well, a few people at the very top who make a lot of money, and there's no way we can get away around it. So I'll first point over the fence and say exactly what you've just described is fiat. You have some people at the top, the mega whales, the Wall Street boys, who have institutional money, who pretty much destroy the rest of us when they get the first offerings to an equities market, when they get control of printing money. You've got interest rates when you have inflation, the rich get richer and the poor get poorer and the middle class gets destroyed. And that's the system we've got at the moment. It's getting worse and worse and worse. Okay, so now let's go over to Bitcoin. Yes, absolutely. It's a fair point. There are whales at the top. They have a lot of money that can move the price. But I can easily answer the question. If the market cap of all of crypto at the moment is $1 trillion, it just crossed today. Now, in the past, it's been $2 trillion, but at the moment, it's $1 trillion. If I want to double that market cap, I only need $1 trillion to double that market cap. But when it gets to a quadrillion dollars, which is $1,000 trillion, there are very few people in the world, in fact, no one in the world, can come up with $1 quadrillion to manipulate the market. So when Bitcoin had a market cap of $100, you only needed $100 to double it. That was probably the most malleable market in the history of Bitcoin, of course. But those who were in those markets early are now the mega rich who have a different coloured Lamborghini for every day of the week because they got in early and they accumulated a lot of crypto. Now, the truth is, every year, Bitcoin becomes less and less volatile. Now, the irony of that is that people coming in and say, well, why would I get into Bitcoin? Because now I can't get 10 Lamborghinis like that person did 10 years ago. That's not what Bitcoin was made for. Bitcoin wasn't made to get 10 Lamborghinis by buying low and selling high. It's replacing a broken fiat system. A consequence, and a fortunate consequence of getting in these markets early was, hey, yeah, I've come into this. And the same with all business. Think of any ICO, IEO, IPO. You get in early, you take the risk, you put in the money, you get a share, and you make the biggest return. Look at any ICO or IPO in the history of successful businesses. Those who get in early get the biggest returns. Then as the markets mature, the Wall Street boys, as I've mentioned before, they come in and they play their game. They come in and say, oh, these are low cap markets. We can manipulate these markets and we can get some big wins quickly. And that's true. It absolutely happened. But the market cap is only $1 trillion now. Now, a few years ago, it was $500 million, and a few years before that, it was $100. But very shortly, these market caps will be $5 trillion, $10 trillion, $100 trillion, and then quadrillions of dollars, and at which stage the whales are extinct. The whales cannot play the games that they are playing anymore. Governments can't do it. Federal Reserves can't do it. Entities can't do it. Banks can't do it. No one can do it. Why? Because the market caps are too big. But at the moment, absolutely, whilst they're small, they are more malleable. As they get bigger, they become less volatile, and the whales will become extinct, and those whales will actually migrate to different markets to play their game again.
It is a game, isn't it? Well, we're coming to the end of the show because, you came on late and we've run over quite a long way. I did put a poll up before we started. I just might share the results of the poll. So I did actually ask, Bitcoin was at 21,858 tonight. In 1 year from now, do you think it will be priced higher, lower, the same, or gone? 45% said higher, 37% said lower, 8% said the same, and 11% said gone. So in fact, there are more people who actually say it's gone higher. There you go.
Well, it goes back to the anchor point. What are we comparing it to? So if Bitcoin does nothing, let's say Bitcoin does nothing, of course it's going to be higher. Why? Because what's it compared to? It's compared to a collapsing dollar. And you might say, well, I don't want to use it. It doesn't matter. Any dollar, any fiat, any euro, it doesn't matter. It's all fiat, it's all crap, it's all collapsing. So all Bitcoin has to do is nothing, and it's going to go up in value nominally. But I believe there's actually going to be a massive tipping point where if you listen to great economists, they talk about it happens very slowly, then it happens a bit quicker, and then suddenly there's a huge run on the banks. Yep. You look at Venezuela, Greece, Argentina, Cyprus, take a pick. It kind of builds up and then bang, there's a massive explosion. and the bank shut the doors. Now, if you've got your money in fiat, first of all, and I'm not saying sell everything and buy Bitcoin. I'm not saying that. I'm saying I guarantee your money in fiat will be less worth next year than it is this year. In fact, I'll put it out on a live bet. I bet my house that your money will be worth less next year than this year if you keep it all in fiat, guaranteed. Now, contrasted to Bitcoin, the odds are better than that. The odds are way better than that. So here's the irony. The irony is, as humans, we're like, oh no, I'm far more comfortable keeping my money or my value and my time and my energy in a value that's guaranteed to be worth less next year than this year. That's what we've got at the moment. We're all playing this game as like, oh yeah, we'll keep it in dollars, even though we know for a fact it's going down. Now with Bitcoin, I cannot and will not guarantee that it will be worth more next year, but I know it's got a way better chance of being worth more next year than fiat does, because fiat's guaranteed to go down. So why not just put $1 in? Just put $1 in and see what happens. Yeah. Get in the game. Well, I mean, you mentioned, I did hear you at the beginning of this video that you bought in 2020, did you say?
Yeah, around 5,000, yeah.
All right, so you're up, what, 400%? That sounds terrible, Martin.
I know.
Look, are there any other now, again, I'm now coming back to it being a speculative asset. So remember, it's not just a speculative asset. Honestly, tell the viewers, is there any other asset out there that gave you 300 or 400% in 2 years?
No, but then I didn't sell. Well, I did sell some actually. But so when it got to 60 something, I thought that's enough to know that it's worth actually, crystallizing some of that, because I wasn't sure it was going to continue. So, but I've still got some that I bought 5,000 and it's now 21,000. So I'm still 4 times up.
My friend, you don't want to sell it. I'll tell you what.
I don't intend to.
Well, just think of it. Sorry to interrupt. Start to look at it as digital property. Now, again, this is a difficult paradigm. It's taken me 5 years doing this full time to get to this point. 5 years full time, and that's on top of a master's of business, a bachelor of management, and a bachelor of economics. That's on top of that, and 20 years of trading and writing a book on trading. It's taken me 5 years to get to this point in Bitcoin. If I gave you a downtown building in Manhattan, would you sell that asset to gain the profits of the capital growth of that building, or would you borrow against it? Well, you'd borrow against it, because if you sold it, first of all, you lose the asset. Second of all, you lose any appreciation that would happen in the future. But third of all, you're going to pay tax on that sale. So what do the rich do? You don't sell it, you borrow against it. Now, this is a future concept, but people are already doing it. They don't sell their Bitcoin. They borrow against it. Just as you borrow against your house, you borrow against a downtown Manhattan building, you borrow against these appreciating assets. So you keep the asset, it continues to go up, and you don't pay tax on it.
No, I understand that. And I should explain the reason I bought it was because I wanted to understand, and I thought the only way to understand this stuff was to actually get my hands slightly dirty, right? So I didn't buy a lot, but enough to know how it works and wallets and those sorts of things, right? Because the only way you can't, I don't think you can look at this from the outside in. I actually think the only way is to actually get your hands dirty and see how it actually behaves. So that's why I did it.
And I'm glad you did that, because it's like playing, I was actually coaching someone recently and I was talking about soccer, and they said they really like soccer. And I said, do you play soccer? And they said, yeah. And I said, isn't the game different when you're playing it to when you're watching it? And they said, yeah, heaps different. And I said, well, it's the same with trading. But here's the difference. When I trade in the equities markets, I need a $500 buy-in. But when I trade crypto, I need 1 cent. And so that's what I say to everyone coming in. Look, hate it, but just put in a cent, not even $1, 1 cent. And if you put in 1 cent, you've got skin in the game and you can start to feel it. You're like, oh, I see what's happening here. Oh, I get what these coins are. I get how they're crap coins. I get how this grows. I can see what's happening here. But unlike where I had to start trading with $500 when I was a poor university student, a $500 purchase when you're a university student with a $50 buy-in fee, this was 20 years ago, that was a huge event. Well, crypto, I just pick up my phone, and with 1 cent, 24 hours a day, 7 days a week, 365 days a year, I'm in the game. So to the viewers out there, if you hate it, just put in a cent. Put in a cent. Come over to thecrypto.land, www.thecrypto.land. use any of the exchanges there that you want. I don't care which one you use. Put in a cent, see what happens. If you hate it, cash your 1 cent out and go back to the sinking ship that is fiat.
Nice way to finish, Adam. And as well as your YouTube channel, which is Adam Stokes, right? So it's easy to find. The crypto land is obviously the center of gravity for what you do, isn't it?
Yeah, so I've got obviously my channel, Adam Stokes. Come follow me there. Twitter, which is Adam_Stokesy. My book, 28 Pro Trader Tips, The Art of Trading. And the crypto land, which is www.thecrypto.land.
Terrific. Well, thank you very much, and thanks for coming on. Even if it was a little late, we got there, and I think it was a very good conversation. So the guys in the chat seem to have appreciated it on the whole, and we'll do it again sometime. we'll try and have a show that starts the time we expect it to start. I had to say, I don't know what you thought, but I actually thought I did quite well for the first half an hour or so without knowing.
Oh, you were brilliant. You know what was so funny is that, as I said, I was watching you and I'm like, I need to be part of this. And the IT just wasn't playing the game at all. But I'm very proud of you, Uncle Martin. You've done very well. And what you practice what you preach. As a philosopher, you continually ask the questions. And I've even, how long have we been working together for? At least 2 years.
Yeah,
I've watched not only your understanding of crypto evolve, but your acceptance of Bitcoin and crypto evolve. So I'm very impressed.
Thank you so much. Well, I appreciate that. I'm going to take you offline now and I'll just close out the show. And thanks very much for coming in and shedding some further light on this very interesting and quite complicated and, I'd say, confusing subject. Thank you so much. See you later.
Thank you, Martin.
Okay, take care. There we are, folks. Hope you've found that useful. Sorry, the first half was a little bit different to what I expected, but you got all the value in the second half nevertheless. Just to say that next week, last Tuesday of the month, Damien's coming on. We're going to talk about the markets and what's happening, and particularly, of course, the last month. Very, very interesting, very important. And so join us for that. It should be worth watching. And I will just say that the old doggies are still there. Mitya went back. She'd had enough of the lap sitting, and so she's gone back to sleep again. I'll have to walk her later before I go to bed. It's raining. She won't like that, but there you go. So I want to say thank you very much for spending some time with us. I hope you found that useful. Watch our other shows during the week and join us again next week for another Tuesday evening live show. And thank you very much. I'll see you later. Take care. Keep well. Keep safe. This is Martin North from Digital Finance Analytics signing off. Cheerio.